Hello everyone, this is Srivatsav Malempati and this is my Capstone project presentation for the Fintech program by Harvard University. I have chosen problem 5 as the topic of my project. The cryptocurrency and blockchain bubble. Have things gone too far? The problem talks about Emma, a blockchain advisor in a private investment firm who has to advise her employers on which cryptocurrency based companies to invest in and which ones to avoid. The reason for this is because many companies are misusing this boom to revive dwindling profits by improving their stock price. Kodak and Long Island Iced Tea Corp are two companies that were identified by Emma, and I would give you my perspective on these two companies later in the presentation. Now, my solution revolves around three types of analysis. The first two are qualitative analysis and quantitative analysis. The third one is a coinage of mine called responsive analysis. I will explain why I call it this later in the presentation. I believe that the insights gained from these three forms of analysis help in filtering out investment options. Now, the five major sectors I personally feel can immediately benefit from the distributed ledger technology are finance, governance, trade, medicine, and supply chain. I say this due to existing use cases of services related to these sectors that have already been successful. As you can see, the services in demand are smart contracts, data privacy, personal identification systems, health data systems, voting systems, payment service systems, and finally, supply chains. Now, before we move on to the next slide, I'd like to say that it is important to understand what a digital currency is. I'm focusing on ICOs and ETOs. An ICO is the most commonly known offering for cryptocurrencies. Every crypto based company offers a range of services for which their users have an interest in, and offering their own tokenized currency is just one of the product offerings. So, the coin is basically a utility token which can be used to get benefits from other services provided by the same company. In an ETO, however, the token is an equity token where the owner of the token owns a part of the company. ICOs are not fully regulated and are a form of crowd investing. ETOs are regulated and the investors are professional and well informed. The major problem with the ICO is the fact that it is highly volatile, and in most of them, a majority of the tokens are owned by a small percentage of investors. Therefore, it is prone to the pump and dump scheme where the average investor takes the biggest hit. ETOs are less volatile and comparatively stable, making them great long term investments. There have been about 1,900 ICOs since 2017, and almost 50% of them have failed to raise a single dollar. And almost 40% of the companies have raised between $1 and $100 million. This category is an interesting one because companies like Kodak and Long Blockchain Corp fall into this category. In the next slide, we're going to see how many of these companies actually got listed. The companies that have gone for ICOs are divided into six categories. Scam, failed, and gone dead are the ones that failed to list. Dwindling, promising, and successful are the ones that succeeded to list. A whopping 92% of the companies failed to list, which is quite alarming. In the following slide, we're going to look at some stats related to this. 81% of these offerings were scams, and less than 2% were successful. So, this brings us all to a common question. Are crypto based companies a good bet? Well, let's do some analysis beginning with qualitative analysis. These are some of the use cases of digital currencies and distributed ledger systems. The eye striking companies are IBM Blockchain, Spotify, Accenture, Ubiquity, and Ripple. We can clearly see that some services are common offerings like smart contracts, real estate services, payment systems, and supply chain transparency systems. When investing in any crypto based company, it would be useful to see the services they intend to provide. Any of these services that I mentioned in the first slide as well can be shortlisted. The next slide talks about responsive analysis. The reason why I call it responsive is because there is a need to respond to news related to companies that are prospective investments by further relating it to other quantitative figures. I consider partnerships as one of the key metrics to measure credibility. This is an example of how a cryptocurrency's price grew by over 700% in 8 weeks. Chainlink is a decentralized Oracle network and they are focused on smart contracts. They announced a number of partnerships with established companies in the months of May and June in 2019. The eye catchers are Google, Oracle, and dApps. The objectives were varied, which makes them an even greater investment prospect. Diversified services means greater potential for long term growth. So, from an investor's perspective, it is very important to stay on the lookout for such information. Now, we move on to quantitative analysis. We are first going to look at ROI or return on investment. It is the net gain from an investment compared to the initial cost. In this case, it is the current price of the currency compared to the price at the time of the ICO. These are seven companies, namely NXT, IOTA, Ethereum, SpectreCoin, Neo, Binance, and Stratus, with the highest all time ROIs. Ethereum is the widely popular one on this list. Periodical ROIs and all time ROIs are both equally important as they together denote a certain amount of stability. In the next slide, we're going to look at something very interesting. These are six companies with the highest short term ROIs. The first four have a negative all time ROI despite having high short term ROIs. DGXDAO and Chainlink have a lower yet positive short term ROI. This observation clearly tells us that short term growth cannot determine long term prospects. Chainlink and DGXDAO's ROIs tell us that consistent positive growth is a key indicator of long term growth. And these are the only two companies that can further be shortlisted from this list. The next measure is market cap or market capitalization. These are 24 companies with the highest market caps. The market cap is the current market price of a cryptocurrency multiplied by the volume of the currency. We can see most of these companies from the top all time ROIs list in this list. It is safe to say any company which has a market cap of more than 500 million US dollars is a fairly stable prospect, yet volatile. What about currencies that have a genuine value but a market cap below $500 million? Here are some key strategy pointers. Staying updated on news of partnerships and periodical fluctuations and relating the two. Less volatile currencies are a safer bet. Next, partnerships with governments and regulatory bodies add to the credibility of a cryptocurrency. One other important point is to keep a track on the existing supply, as most of these currencies have a predetermined maximum supply. And finally, high volume investments in low price currencies are far less riskier than high price currencies. They have greater ROI potential and lower costs. Now, let us look at some of the challenges. The key issues voiced by users are regarding security, transparency, credibility, trading fees, liquidity, price manipulation, transaction delays, regulation, which is basically a lack of it, and decentralization. Now, the two cases of misuse through integration can be understood by comparing their stock prices before and after integration of the blockchain with their current market price. In both cases, the prices have tripled at the point of these announcements, but their current market price is much lower than their price before integration. So these are clear cases of companies that have chosen to take advantage of the blockchain bubble. Before an investment, it is imperative to consider a company's position before they choose to move into this market. Do they have valuable solutions to provide? How was their performance in the books prior to this adoption? Are they just looking to survive until they find their next pot of gold? These are some important questions to ponder over. I would like to conclude. by touching upon some important points. Firstly, cryptocurrencies still have great value, while blockchain services have an increasing demand. Secondly, a great strategy would be to diversify investments into companies that provide varied blockchain solutions. Thirdly, qualitative, quantitative, and responsive analysis with respect to nature of services, partnerships, ROI, and market cap is a great way to shortlist and filter out the best investment prospects. Finally, it is important to remember that if or until better regulations come into effect, the crypto market will remain volatile and prone to price manipulations, pump and dump schemes, etc. This is my solution to help separate genuine companies from those that have no real value and further filter out the best cryptocurrency companies to invest in. This concludes my presentation. Thank you.